Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filing so you don't have to. Today we're diving into Patrick Industries' preliminary proxy statement. Don't worry, it's not as scary as it sounds. Think of it as a behind the scenes look at what the company's been up to and what big decisions are coming down the pipeline and get to vote about it. Will there be a plot twist? Find out in the video team. This report is basically a notice about their annual shareholder meeting. It tells you when it is, what's on the agenda, and how you can vote, even from your couch. There's also some interesting information about the company's performance, who's on the board, and how much the executives get paid, all the good stuff. First, a quick roadmap. We'll touch on the company's highlights from last year, look at the proposals shareholders will be voting on, then we'll peek at executive pay, because everyone's curious about that. And finally, I'll give you my take on it all. All right, let's get into some highlights. Patrick Industries calls fiscal year 2024 a year of strategic execution. Despite a tough environment, they focused on efficiency and made some key acquisitions, Sportech in power sports and RecPro in aftermarket solutions. Think of it as them trying to become a one-stop shop for the outdoor enthusiast and housing markets. They also refinanced some debt, which is like getting a better deal on your mortgage, giving them more financial breathing room. Let's dive into the numbers. The report gives us a quick snapshot of their financials. Net sales were at $3,716 million. Operating margin, which is basically how much profit they make on each sale after covering basic costs, was almost 7%. Finally, operating cash flows, which is how much money the business brings in day to day, were $302 was. Now, it's worth noting that while those numbers look okay, a little more detail, like looking back at 2021 or 2021 or 2022, we see that sales are down from those years. Basically, things are slowing down since then. Don't be fooled by the PR, things are cooling down. Okay, everyone loves this part, executive compensation. The company says their leaders are motivated by key metrics, meaning the leaders work to meet certain goals that then drive growth, profits, and shareholder value. To achieve that, there is focus on something called variable pay. This variable pay thing means that the CEO takes home a bit less of a guaranteed salary, but then can get bonuses depending on how the company does. Patrick Industries believes this keeps everyone focused on doing their best, so the company does great. They try to put executives' compensation in line with their peer companies, but that's a bit of a moving target. There is external consultants from Willis Towers Watson. I wonder how much they get paid. Moving on to corporate governance, which is basically how the company is run. The board has an audit committee and reports to the board regarding material risks as needed. The audit committee also ensures financial and accounting officers report directly to the committee regarding material risks. The company also touts that 7 of their 9 board members are independent directors. This is supposed to make sure the board isn't just a rubber stamp for management. Now let's talk about the folks running the show, the board of directors. You as a shareholder get to vote on who sits on this board. There are 9 nominees up for election. Most are current board members, but there are a couple of new names in the mix. Blake Augsburger and Natalie Brown. They want people with experience in different fields, so they have a more diverse range of perspectives at the top. The board is urging you to vote for the list of candidates. So what does it pay to be a board member? Well, it's not exactly chump change. The non-employee directors get an annual retainer, basically a set fee for their service. On top of that, they get extra for chairing committees and stock grants. They list out the fee table. Audit committee chair gets $20,000 a year. Lead independent director gets $25,000 a year. Lead independent director gets $25,000 a year. Lead independent director gets $25,000. Board members each get stocks of about $140,000 every year. Lead independent director gets $25,000. Board members each get stocks of about $140,000 every year. Lead independent director gets $25,000. Board members each get stocks of about $140,000 every year. Lead independent director gets $25,000 a year. Lead independent director gets $25,000. Board members each get stocks of about $40,000 every year. Lead independent director gets $25,000. Board members each get stocks of about $440,000 every year. Next up, shareholders are asked to ratify the appointment of Deloitte and Touche as their independent accounting firm for 2025. Basically, you're voting to say you're okay with the company's choice of auditors. They have been the accounting firm since 2019. Speaking of Deloitte, the report breaks down how much they get paid. In 2024, audit fees were $3,300 Aussie, $5,300. Those fees are for checking the company's financial statements and making sure everything looks legit. Basically, they have to give an okay that the company is not smoking something weird. Time for another advisory vote. This one is all about executive pay. Basically, the shareholders get to vote to approve or disapprove in an advisory fashion. It's not legally binding, but the company cares about what the shareholders say. The board urges you to vote for their executive compensation packages. Proposal number 4 is about increasing the amount of stock the company is allowed to issue. Right now, they can issue 40 million shares, and they want to bump that up to 60 million. This is because it allows them more flexibility for things like stock splits, dividends, acquisitions, or raising capital. It's not necessarily a bad thing, but it can dilute existing shareholders' stake in the company. The last proposal is a say-on-frequency vote. It's about how often shareholders get to vote on executive compensation. The choices are every 1, 2, or 3 years. The board recommends voting for every 1 year, giving you more regular input on executive pay. Now, let's quickly meet the top executives. There's Andy Nemeth, the CEO, and several others in key positions like Jeffrey Rodino, the president of Recreational Vehicles, Kip Ellis, president of Power Sports, and Andrew Roeder, the CFO. Getting familiar with these names is important because they're making the big decisions. So how do these executives get paid? The company uses a pay-at-risk philosophy. Basically, their base salaries are a little lower, but they have a chance to earn big bonuses if the company does well. It's all tied to performance metrics. A big chunk of their compensation comes in the form of something called the Long-Term Incentive Plan, LTIP for short. These awards are based on how the company performs over a 3-year period. If the company hits its targets, they get more stock. It's designed to align their interests with the long-term success of the company and therefore its shareholders. There is an interesting section about what happens if an executive leaves the company or there is a change in control. The company has to give them severance, like for example 12 months of pay. Now, who owns the company? Here are some of the major shareholders. BlackRock owns about 15%, FMR LLC owns about 11%, and the Vanguard Group owns about 7%. It's important to keep an eye on who the big shareholders are, as their interests can influence the company's direction. Finally, a note on householding. If you and someone else in your household own Patrick Industries stock, you might only get 1 copy of the proxy materials. If you want separate copies, you can request them. Also, if something is missing in these proxy voting cards, you can always contact them. So what's my take on all this? Patrick Industries seems to be navigating a challenging market by focusing on efficiency and diversification. The financial numbers, while showing some slowdown compared to previous years, are still respectable. The company seems to really tout the long-term shareholder value when it comes to incentivizing its executives, and the numbers might back that up. But like with any company, there are risks to keep in mind. A key one is the dependence on the outdoor enthusiast and housing markets, which can be cyclical. So if those go cold, there will be some more layoffs, I imagine. Overall, Patrick Industries seems to be a solid company with a clear strategy. Thanks for watching. If you enjoyed the video, please subscribe, like, and comment down below.